You're listening to AM Now, an Accounting Matters podcast. I'm Adam Olsen.
And I'm Matt Fisser.
We have several key updates this week, so let's jump right in. In our last episode, we highlighted IFRS 19, a new accounting standard issued by the IASB, which permits certain subsidiaries to provide reduced disclosures when applying IFRS in their separate financial statements, as long as they do not have public accountability and their parent company applies IFRS in the consolidated financial statements. In response, the SEC released a statement that if the subsidiaries are included in SEC filings, additional disclosures will likely be required so as not to mislead the investors in the U.S. public securities markets. As a reminder, under SEC rules, registrants are generally required to file certain financial statements prepared in accordance with U.S. GAAP. However, foreign private issuers are also permitted to file financial statements that are prepared in accordance with IFRS as issued by the IASB with reconciliation to U.S. GAAP.
The SEC indicated disclosures that are fit for other purposes for entities without public accountability may not be sufficient to satisfy the needs of investors in the U.S. public securities markets. In these cases, the Commission noted such entities should carefully consider whether additional material disclosures from other IFRS accounting standards are necessary to achieve the objective of financial reporting given the use of those financial statements in a filing with the SEC.
And sticking with the SEC, and as another follow-up, in our last episode, we covered the story on how audit firm BF Borgers was permanently suspended from practicing before the SEC for deliberately and systematically failing to meet PCAOB audit and review standards. Any SEC issuers who had engaged BF Borgers for audit or review services were required promptly to file Form 8K Item 4.01 within 4 days of the firm's resignation or dismissal and hire a new qualified PCAOB registered public accountant.
Given the widespread impacts of this fallout, the SEC has now provided relief to the affected issuers by providing additional time to hire a new public accountant and file quarterly and transition reports on their Form 10Q as long as they file the timely Form 12B25. To notify the Commission of their inability to file a report on a timely basis due to the timing of BF Borgers suspension and the filing deadline for Q1.
Moving along to the international sustainability news, the IFRS Foundation updated their guide to getting started on implementing the integrated reporting framework and how to take account of the IFRS Sustainability Disclosure Standards. Ultimately, this guide will help integrated reporters understand how the framework and the disclosure standards work together to improve transparency in their reporting.
It should be noted that using this guide does not result in compliance with the IFRS S1 general requirements for disclosure of sustainability-related financial information and IFRS S2 climate-related disclosures, but it will provide key areas to consider and provide insight on how to embed these disclosures and improve comparability of the integrated reports.
And continuing with sustainability news, the European Securities and Markets Authority, otherwise known as ESMA, the EU markets regulator, released new guidelines for how to use ESG and sustainability-related terms in investment fund names. This is to address what they are calling an increasing risk of greenwashing, where an asset manager seeks to include sustainability-related terms in the name of a fund to attract investors who are increasingly interested in funds with an ESG focus.
Ultimately, ESMA requires a threshold of an 80% minimum proportion of investments in a fund that meet the sustainability characteristic in order to use the term sustainable. ESMA also included final guidelines for a transition category and certain exclusions as well. These new guidelines will be effective 3 months after publication on their website.
And many might think this rule sounds familiar, and they're not wrong. Not too long ago, the SEC also issued its investment fund name rule to help address similar concerns here in the U.S. That rule was focused on, again, investor protection by improving and broadening the scope of funds that must comply with the requirement to adopt a policy to invest at least 80% of their assets in accordance with the investment focus the fund's name suggests.
To close out this week, as impacted companies are making a hard press towards CSRD readiness, EFRAG released its compilation of 68 unique explanations to respond to various stakeholders' technical questions on the application of European sustainability reporting standards required under the CSRD.
These responses are provided as part of EFRAG's role as a technical advisor to the European Commission and are expected to provide practical and timely support to preparers and others in the implementation of the ESRS. The explanations released by EFRAG cover numerous topics grouped across the nature of the reporting standards, including cross-cutting, environment, social, or governance, and their related disclosure requirements. For background, late last year, EFRAG launched its ESRS Q&A platform designed to collect and answer technical questions supporting preparers and other stakeholders with the implementation of the ESRS.
Answers to these inquiries by EFRAG may take several forms, including release of new implementation guidance or in explanations. When answers are in the form of explanations, they are done so as they relate to cases in which the current content of ESRS already provides an appropriate answer. While the explanations are non-authoritative in nature, they do address technical questions on ESRS by showing where in the standards the content is provided and how to navigate them accordingly for reporting entities. This is welcomed relief as companies struggle to get their hands around complying with the CSRD and meeting the requirements of the ESRSs.
And that rounds us out for this week. For a deeper dive into what's trending in accounting, finance, and sustainability reporting, check out our other podcasts on the Accounting Matters feed wherever you listen to your podcasts. Again, I'm Adam Olsen.
And I'm Matt Fisser.
Thanks for listening to AM Now. We'll see you next week.